Not everything is about money. Invest with your heart. Be greedy when others are fearful. The best time to plant a tree is 20 years ago, and the next best time is today. Hi guys, I'm Tono, a fund manager and head of fixed income at BPI Asset Management. Thanks for participating in the first 9.9 BPI investment day.
Since we are #invested in you, you can be one of the lucky winners of 10,000 investment credits today. Here's how. Watch any of the videos that we will stream at the 9.9 BPI Investment Day. Take note of the unique code that will randomly appear throughout the video. Answer the survey at the end of each video and don't forget to key in the correct unique code. For every survey that you submit, you will get one raffle ticket for a chance to win one of 9 10,000 investment credits. Here's a pro tip. Watch more sessions at the 9.9 BPI Investment Day for more chances of winning.
Because BPI Asset Management is #invested in you. For today's video, I'll be giving you tips on how to have a successful investment journey. If you want to know more, keep watching. So just to give you a bit of background, I've been monitoring the markets since I was in high school. That's around 1997. So for those of you that don't know, that actually coincided with one of the worst crises we've had, the Asian financial crisis. And oddly enough, I started my professional career investing in the markets in 2008, which likewise coincides with the great financial crisis. So it's really been a ride. I've been through several crises and bear markets, including the one that we're currently going through. So hopefully I can share with you a bit of knowledge, some tips, from my experiences in the past 20 odd years, and hopefully it aids you in your investment journey. So I'm looking at giving about 10 tips, and some if not all are applicable not only in bear markets but any type of markets. Really, the first step is to understand why you want to invest. It really doesn't pay off if you simply have a number in mind. Having 1 million pesos is not necessarily the goal. It becomes much more concrete for you to say that you want a home. That home allows you to have a particular target and understand why you're investing. Aside from having these concrete goals, such as a home, it's also beneficial if you have a certain list, something that segregates nice-to-haves from those that are must-haves. This allows you to decide which to prioritize. But aside from these goals and must-haves and nice-to-haves, it's also important for you to understand the experiences you've had, how they've shaped your attitudes and the mindsets that you have because of them. In my case, I've gone through crisis after crisis, and I've seen how things have rebounded. This has shaped me in a way that allows me to want to take more risk. Unlike most people, when I see red in the market, I actually think of it as a good thing. I actually want to invest more because I have a firm belief that things are going to rebound and things are going to be better. So I see it as an opportunity. But admittedly, not everyone will have that type of mindset. Others will see the red and be very, very fearful. So one of the things that you really have to understand is how much risk you're actually willing to take. A lot of people lose sleep over seeing how their portfolio is reacting to the market. Other people thrive in it, and they actually do want to see it day by day. So understanding how you react allows you to plan out better how to reach your goals. Some people should probably just create a portfolio, invest, and look at it once, maybe twice a year. Other people those that thrive in seeing how things are moving, could and probably can look at it on a day-to-day basis through all the possible channels that are offered to them. My second tip is actually to learn about investing, and more importantly, to not invest in things that you don't understand. For the vast majority of people, one of the best advice that I could possibly give is buying the book before buying the actual item. So this is extremely applicable in investing as well. So you need to understand what you're buying before you actually buy it. A lot of people have buyer's remorse because they bought something without understanding how it reacts and how it performs. Now, nowadays, information is very much available. Everything's at your fingertips, and you should make the most out of this. Of course, there's the caveat that you need to find trustworthy sources of information. So you can search out blogs, podcasts, and books. In fact, a good way to start is BPI Asset Management's Wealth Radio. It's a podcast available in Spotify, which walks people through the basics of investing. My third tip is to pay yourself first. A lot of people start off thinking that savings is simply what is left over after living expenses. To be honest, the exact opposite should be done. You should treat savings as your primary expense. So spend on your savings first and then live your life. So a lot of people suggest maybe saving 10, possibly 20%, but the higher the better. The quicker you'll reach your goals. And a lot of times you'll find that it's not that hard. I myself started off saving about 10% when I first started working, and happily that percentage has increased as experience happens. My fourth tip for you guys is really to create an investment plan, and possibly more importantly, to revisit regularly. Financial products are just tools, and you want to make sure that you have the right tool for the job. Just as you would not recommend building a house with a Swiss knife, you would not recommend creating an emergency fund with a very volatile investment. So you need to match the investment you make with the goal you have and the time horizon that you have to reach that goal. And of course, as you age, your goals will change. And so your investment plan should change with you. So having a periodic review of these plans is extremely ideal. Now, my fifth tip for you guys is to not procrastinate. I don't know about the rest of you, but I'm a procrastinator. I tend to leave things for the last minute, believing that I want it executed perfectly. And so I tend to think and think and think. But there's a Chinese proverb that says the best time to plant a tree is 20 years ago, and the next best time is today. And that applies for investing. So lay out the plan, but don't take too long and start as early as possible. Because with investments, compounding is very important. And one of your strongest allies in investing is time. So the sooner you start, the better. My sixth tip is to put your investments on autopilot and invest regularly. So with improvements in technology, we can now automate a lot of things in our lives. There are people that automate cleaning of their rooms through robot vacuums and the like. And investments is no different. You can actually lay everything out and have it executed on a periodic basis. In fact, the way I do it, I have monthly investments that are set to match whenever I get paid, and it's automatically deducted from my payroll account. What this allows you is that since you're investing regularly, you're actually getting a better price on the overall thing, especially if in periods of volatility, because you end up investing the same amount, but buying more of an item or a fund or an investment as prices are low, and you buy less of it when prices are high. So by investing regularly, you get a better price overall. Also, I feel that you benefit psychologically. I know a lot of people have the temptation to spend, especially when they see money lying around in their account. If you have it automatically deducted, you no longer have that problem. It's invested for you, and temptation is lower. Frankly, one would be surprised. Small amounts accumulate very quickly over time. My seventh tip is to diversify your investments. When I first started investing, I was limited to the Philippines. But nowadays, you have so many options. You don't only have options within the Philippines, whether to invest in money market funds in the Philippines, stock market, bond market, but you likewise have different currencies that you can invest in. You likewise have other markets that you can invest in. You can invest in the US by simply purchasing a UITF now. The best part about diversification is that the overall risk that you have is potentially less, since different markets move in different ways. And potentially you're not giving up too much in terms of returns as things compensate for each other. My eighth tip to you guys is to invest with your heart. Not everything is about money. So some people invest their time for particular causes. Others donate their money for charity. Today, you can actually invest and still potentially have a positive impact to society. Sustainability funds are now available. They may suit your need if you would like to protect the environment or perhaps improve healthcare and education. I believe one of my colleagues, Alan D, is speaking on this. So be sure to take a look at his talk. My last two tips for you guys really go hand in hand. So what we've been talking about is typically mindsets on how to invest for the long term. And these two will aid you even further. So my ninth tip is to be greedy when others are fearful and fearful when others are greedy. So what this is really telling you to do is to go against your emotions. Don't react. Don't act on knee-jerk reactions, and really think things through. Revisit your plan. Why are you investing? Will it really materially affect the way your investments happen? So lastly, be patient. Time is on your side. You don't necessarily have to react first thing. Take time out, revisit, look at your plan, see how things fall into place, and then decide. You don't necessarily have to act this minute. And that's it for today's video. I hope you enjoyed watching and you learned a lot from our quick discussion. Please continue supporting the next sessions at the 9.9 BPI Investment Day, and watch out for the next speakers.
Since we are #invested in you, you can be one of the lucky winners of 10,000 investment credits today. Here's how. Watch any of the videos that we will stream at the 9.9 BPI Investment Day. Take note of the unique code that will randomly appear throughout the video. Answer the survey at the end of each video and don't forget to key in the correct unique code. For every survey that you submit, you will get one raffle ticket for a chance to win one of 9 10,000 investment credits. Here's a pro tip. Watch more sessions at the 9.9 BPI Investment Day for more chances of winning.